Hey guys, I want to go over the dollar really quick because there's some things kind of setting up, and I want you to just kind of be aware of what's going on. It'd be a good trade ending this year. So, without any further delay, let's get into it. So, this is a dollar. This is a 20 roughly years chart. It's 2000 to current prices, and there's three cycles here that are important. Let's move this over here. One is the 180s, the strongest one. If you've been watching my videos, we hit a peak here of February the 13th of this year, and this cycle is down. The next one that comes in is the 226, which is this one. We just hit a peak right here around September the 25th. Now this cycle is down. And then the last one, which is this. So this is the one that's tricky. It's the 393 cycle. This one hits a peak somewhere around February, you can say February the 5th, that week. And what's tricky about this one is that it could be possible that the dollar could pull back, but then kind of grind higher into January, late January, early February, and then turn. So it's kind of like, all right, just in case if I'm wrong and it goes up. And the only way we could validate that is if we could take out 106.73. If we get a pop here within the next couple of weeks and it takes out that high, whatever the high is, this is closed prices, so this is different. Whatever that high is where we sold off, if it takes that out, there could be a slight chance that, it could go higher. I'm not leaning that way. I'm thinking maybe it's going to start going down, but you never know. This is the curveball. So I just want to let you know, I'm thinking about going long the metals and, some certain currencies, but this is the curveball for me that is not aligning with my thesis that, it'll go down. Seasonality is confirming that December's weak. And, and gold is positive, for December and January. So I'm kind of leaning, just in case I'm wrong, this could probably be the curveball that I'm not expecting, but I'm aware of it, that, it could rally and, throw everybody off in regards to seasonalities and cycles. So just want to let you know about this one, because this is the odd one right here. Let's go to the daily and see what we could dissect there. Okay, so this is the daily chart. I'm using data from 2016 until current prices. You can see on the daily, you got this nice little sell-off. And we only have one that's really important here, is the 322 cycle, which is this one right here. And this one hits a peak somewhere around December the 10th. So remember, the weekly cycle goes, there's one that we know it's a curveball, goes all the way to like January, February, and the other two are already negative. And this is the only thing positive on the daily. And then from here, December 10th, around December 10th, 11, it starts going down. So then it will be in sync with two weekly cycles that are down, except the 390, whatever I said on the other clip. But be aware of that. That it could kind of get a little choppy here. I would like to see another little pop, maybe do a trend line here and let it retest that and then pounce and, put a short there. Or, I mean, inverse, like whatever the dollar goes down, that certain commodities like metals and currencies go up. That's kind of the game plan you could probably have. So if it goes up and the one you want to go long pulls back in, you do it inverse. You'll like go long. So I'm waiting for maybe a retest to go up here and do a trend line, or maybe some kind of level resistance where I can see maybe, or maybe this peak right here of what is that, 105 around there and change, and see if it could get up there. If it fails and I see pressure, selling pressure, that's when I'm going to place the long trade on the gold metal and maybe the euro. I haven't decided yet what currency I'm gonna do the trade, but definitely I'm gonna do it on the metals, because I know the metals on the December, January are pretty strong seasonality wise. So I'm trying to see if I could play that play of dollar going down, metals going up, currencies going up. So let's look at another clip and see what we could dissect there. So here's the US dollar using a 5-year right here. You can see there's no really data there for December, but you can see that November is kind of weak. For some reason, January is strong. And then you go to 10-year, you can see that December typically is weak. And November was a little strong. above, but not by much, by 50%. But definitely that's the game plan right there. And December on gold is much stronger, and I believe also January. So they're kind of mixed here, but definitely gold. I didn't look at silver, but I did look at gold. December is very strong. You can see the 15-year. December is weak. January is kind of flat with a little bump here to 53. And then if you go to 20 years, you can see that December is weak. So this is the game plan. This is what I'm kind of trying to bet on. And I got to look at geometry and all this other stuff, but I'm trying to build a thesis that if it's possible that the dollar is going to go down in December, and this is starting to, cripple down, meaning that maybe the equities are going to get this nice little bump, a rally, Christmas rally, what they call. The dollar is going to sell off into December, maybe into January. Gold is going to get a nice little bump. Euro, the currency pairs against the dollars, they're going to get a nice little bump. Maybe silver is going to get a bump. I didn't look at that yet in regards to seasonality. Copper looks like it's starting to move a little bit. I don't know about palladium and platinum, but definitely gold and silver because they got a little edge higher compared to the other, brothers and sisters. So that's what I'm kind of like leaning on. So just kind of keep an eye on the dollar because this is what's going to give us clue into what's going on, into this Christmas rally with the equities, the metals, and the dollar and the currencies. Okay, so this is a commitments of trader report, and this is the one I look at: commercial and non-commercial, large speculators and pretty much commercial. And you can see that commercial has been flat since October 9th. They had just been going sideways, very quiet. I don't know what's going on. Something's cooking under the hood. You can see here, large speculators, very quiet. What was that high? 19,477, and the low was minus 20,699, and it's very, very quiet. So if I'm going to go long gold, and for those that are probably going to short the dollar, what you want to see is for the commitments or trader report when it comes out on Friday or whenever it's due to come out, which normally is on Friday. You want to see a bump going up here, a nice little bump higher, and you want to see speculators go down. But definitely, if speculators are sideways and you see commercial go up, that's still a valid clue that maybe the dollar is going to be turning and commercial could sniff it out and they're going to start hedging. But so far, they haven't revealed their hands. They haven't revealed their cards on the table. They're very quiet, very sneaky, and just maybe watching to see what develops. Maybe they're just waiting for data, information to decide what they're going to do. But it's interesting that they both are like that at the same time. Like not large speculators are erratic. Oh, we're going to go higher. No, we're going to go lower. They're just very, very quiet at the same time. So keep your eyes on the commitments of trade report because this will give you clues into maybe next week if things are going to get really rock and rolling. For shorting the dollar and going long metals and currencies and also equities. Okay, so this is another seasonality chart I like to look at, and this is on the dollar. And you can see right now, let's see, as of November 13th, this is where it's at. Let's add the 5-year. And you can see that it looks like from October 6th, even to October 31st, it starts dwindling lower. Towards the end of the year, it just grinds lower. Let's add the 15-year and the 10-year, I'm sorry. Peaks around November 7th, kind of goes sideways. And towards the end of November 28th, so like the last week of November, kind of grinds sideways. And then from there, it just starts, sideways to lower. Let's add the 15-year seasonality on average, and you can see that it kind of, it's kind of hard. Here it kind of hits a peak maybe somewhere around November 10th, around there. Kind of goes sideways, but then the last week of November, the 28th and 29th, it kind of pulls back in, sideways to lower. The 5-year kind of reveals more of what, the trend is. And the 10 to 15 kind of gives you from what I'm seeing, like the last week of November, it gets a big drop and then it kind of grinds sideways to lower. And I noticed that gold from the last week of November, it gets like this nice little bump to the upside. So keep an eye on that. Just giving you some dates just to keep on your radar. We're all using probability. This is not guaranteed, but something to give you an edge and an understanding of what has happened in the past. Won't exactly play out, but could rhyme. Okay, so this is my trading view chart right here. This is the supply zone area. This is support right now. Support area. This is a buy zone I had way back that we never got to 98. Maybe it happens now in this pullback into December. You never know. But I've always had a target of 98-ish and never really got down there. So you can see this nice little ugly candle on the monthly. We put our Hekanashi. You can see that it's still positive, but it's starting to look like this. But it will eventually get red once it starts selling off. Let's look at the weekly real quick. You can see there's 1, 2, 3, 4, 5, and then there's a A, B. Maybe this is the C, and it did a rally from right here, but the count is unknown right now, and it's still on a buy. There's a lot of support. You can see that this is the week where if you were thinking there was going to be a turning point, it was right here to then go short here. These little patterns on the Hekanashi, you could pick them up really quick like that candle like that. This is not as clear. They need to be like they need to look like little crosses in the middle. They didn't show it here. But when it looks like this, is very obvious. This is not that bad, but this was like these two right here were very obvious. You can see right here it was turning. So if you put a regular candle, you can't tell. I mean, it was just going sideways until this day showed up. And what day was that? That was the 30th. This is the week of that was the week of the 30th. This is the week of the 23rd. When you put your Hekanashi candle, it gives you a little edge. It cuts out the noise, but gives you a little edge. It's like, hey, I mean, for those that are programmers, if you create something that just gives you an alert when they see this on the weekly, be like, oh, heads up. There might be a turning point. Why? Because you were coming from a low to a high. And from here, it could be a greater probability trade that it could go, come back down and retrace. But anyway, I digress. On the weekly, still positive. Let's look at the daily real quick and look at our count. And let's bring this. There's a lot of chop here. There's a lot of chop. There's a 5. Here's a 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And the count ended here. And all this stuff is all like unknown. All right, so we have a sell signal now that just kicked in right here on our super trade, and that was for the 15th on the daily, and because we just took out this level. So if we in the Hekanashi, but there's a lot of support here. If we take our Hekanashi and put a regular candle, so this is when you put the Hekanashi, it's for the ones that are not that risky. For the ones that are a little more risky, you put regular candles, and you get this sell signal right here, which is on the 3rd. So it bounced. I guess, in theory is when you get the signal, wait for the bounce and then short. That's the way it is with the PPS signals on the Thinkorswim. So when you get that sell signal, wait for the retest. And once you see a fail and prices take out, maybe 1 or 2 candles, then you pounce. So far, this is holding. So let's see what's going to happen. And you guys already know about the seasonality and the daily and all that stuff. So the U.S. stocks futures digest latest data dumps. Everybody dollar slightly up as investors digest key data. So everybody's kind of figuring out what's going on with the CPI. We're going to rally. We're going to sell off. What's going on? Is the Fed, all the chatter, all the pretty much the BS that's going on in the markets. So that's where we at here on the daily with the dollar. All right, so this is the last clip. I wanted to show you my simple glance. This is what I use always to get an understanding of the time frames of the markets, which is the monthly, the weekly, and the daily. I look all 3. And let's look at what's going on here in the monthly. You can see that we hit a peak here. And its trend is still up. I think you're below the 20 on the SMA on the monthly. and you got a point of control around 103.02, and you haven't gone down that yet. And you can see that here is another strong support of 102.026. So there's a couple of levels you want to keep an eye on. You got the mobile band, which is at 102.60. So there's a lot of support over here, and market sentiment is still positive. MACD hasn't turned negative yet; it's still positive, but it looks like it was about to. And on the weekly, you're in the cloud. You look like, I thought it was about to like break out of the cloud. As you can see right here, there's a strong level, 107.17, and we pierced it right here. But really, what was that high? 107.34. So you can tell by just looking at the cloud, nothing Gann or nothing crazy or planets or anything, but just looking at the cloud would have just told you, yep, keep an eye on this level and keep an eye on this level. That's why I think the cloud is awesome. I love the freaking cloud. I can't trade about this cloud, especially when I want to do a quick trade and I don't need geometry. I don't need the square 9. I don't need, the Gann grid. I just need to know right now what's going on. The cloud is very essential for my trading. So these are the levels. It failed. You got a PPS sell signal. In theory, you got to wait for a bounce to short. And that looks like that played out well by looking at the closes right here. If I could open this up. You got the PPS sell signal. This is a weekly chart. You got the bounce. And then from there, you short. You look at the daily time frame to do the shorting from a weekly. MACD sell signal kicked in on October the 16th. So from like right here, actually the sell signal was October 16th. So when we came into the week of October the 23rd, this was already giving you heads up. Hey, be careful. There's a possible turning point. Be careful. From right here, everything, what I call is the domino effect. So it looks like it starts out with the MACD, PPS signal, you break the mobile band, and on top of that, you're in the cloud. So here, this is where it gets wild and wonky and volatile. Once you break out of the cloud, that's even better to go short or for more weakness. But here you could get erratic. Here you could get tricked. You get, your head handed in a basket. And you can see that right here, starting to turn positive. Linear regression channel pointing up. Now we're below here. This is going to be an area of support, especially you got the 50, you got the 100 SMA, the 50 SMA, you got the 20. So it could possibly bounce, which would be nice because I'm waiting for maybe another opportunity to go in, and then I'm going to go long on the gold and on the currencies. But so far, this is looking up like a nice little setup. You could do a trend line there, and if it goes up there and it fails, then, nip on it, bounce on it, paw on it, bite on it, whatever you want to call it. On the daily, you can see how it was all developing. From here, we made a high on the 3rd of October, and it was just chop suey. A lot of fake outs here and there. Here, attempted to go up there, kissed the linear regression channel, failed, pushed back, down. This is a value area high. You crack the 20 SMA, the 50 SMA. Looks like the 20 now is going to cross over. You penetrated the cloud, bounced off the cloud. This was a nice little entry to go long on whatever, inverse on the dollar. But I missed that. And now it pushed even lower. So now you don't want to go short because you're already kissing the linear regression channel. You got the 100 SMA, the 200 is creeping up. You want to wait now for, for it to bounce, retrace, and then see where you think is going to possibly stall and turn and give yourself a buffer zone for your stop, just in case you're wrong. So this, let's say if it goes all the way up here and you think, if it goes even up here, I'm willing to take that risk and take some heat in the kitchen. But if it goes here, I need to get out because I'm not risking all this money. I'm wrong. And it's better to be wrong and then it really skyrockets to the sky, or, test this level over here than to be feeling all this pain and thinking you're going to put your stop up here because it's not going to go up there. So definitely, use risk management. For now, we're here. You don't want to go short here because you're at the bottom of the regression channel. It's about going back and forth. It's the back and forth, back and forth. It never goes in a straight line, back and forth. Remember that. It oscillates. So the opportunity is now wait for it to get a bounce. And then, your trading risk, you can see there's some levels here. The cloud is already giving you 104.14. There's a value area high. Maybe you could retest the 50 SMA right here in the 20. You got some linear regression channels. So whatever, rocks your flavor in technical analysis, there's all these levels, and you're only doing with probability, just trying to figure out, what's the possible chance where it's going to bounce and where it's going to stall. Other people use planets. Other people use Gann fans, whatever it is, square of nines, the Gann grid, whatever you want to use. You just make a game plan and be like, all right, if it gets up here, I'm going to short it, watch volume, watch, all these other indicators you use. And then once you start seeing, that pullback, then things are going to be looking in our favor, because we know we have on the back of us the December weakness that is coming up. And if you want to trade the inverse, the gold and all that, we know that they rock and roll, to the upside in December and even sometimes January. So keep a mind on that. Let's look at the midpoint chart. I love this chart. So this is the yearly. This is the line in the sand, and we already took out 104.70. So this is another strategy. This is the midpoint of the year. So we were here, we were good, we were strong, and now we're below it. Can it be possibly that we could go now and test that? That's a line in the sand. That's a big level. If we fail there and you take out that low right there, that's a strategy, 309, put a stop here. If it fails here and it pushes hard, you got triggered short. You go down, make some money. Also another strategy, you could back test this. If you're a programmer, you can see what statistically what makes more money, when you do these kind of strategies. So it could kind of give you an edge and understanding. If it fails here, you can short it and maybe put a stop up here. You don't want to risk a lot, just in case if it's, if it wants to, maybe test that trend line up there. If I do a nice straight line, maybe it wants to go up there and then fail, do it, a bull trap, and then trap everybody up here, and then get, all these stops, whoever that was long, putting their stops down here. So it's one of those things you want to keep an eye on. But remember, 104.70, and I've always pounded this on the table, especially on my videos. I always tell you, keep an eye on that midpoint chart, because that's a key level too. We already failed it on the weekly. As you can see, it's negative, very over extreme. This is a monthly, so we went really deep for the whole month. So I'm sure it's going to bounce. So there's some levels here you would probably want to keep an eye on. There's the 104.87. There was this low right here last month, 105.35, and you got the midpoint, which is 105.44. 105.54, sorry. So you got that right there. You got that midpoint on the weekly, very over extreme. That's why I say I wouldn't short it here. I will wait for a bounce. You got this level right here, 104.54. This one, you got this one right here, 104 for next week. Well, we can't really decide because we haven't closed yet for the week. But definitely the midpoint for this week was 105.42. And for the daily for today, you got 104.86. Yep. Let's make this a little slower. Yep. And this is going to fluctuate, but this is just for today. But I wouldn't wait for today. I will look for the bigger levels, especially the 104.70 is very key. Because if we could get above there to trap more bulls, you want to look at one of the ones that are even higher than 104. But this is definitely the line in the sand and we're below it. Hopefully you like this video. The reason for this video is if you are looking for a swing trade, want to play the seasonality, I already showed you the cycles, showed you the seasonality just on the dollar, because I'm basing all this on the dollar, on the Christmas rally for equities, and for the metals and currencies. This is what you want to look at. You want to watch the dollar. You want to keep your eyes on the dollar, and any little weakness, you just got to be quick and determine your risk now. If this is the trade I'm going to do for this end of this year, I need to know this is how much I'm willing to lose. And if it plays out, I'm going to, it's going to be big. Like and subscribe if you like this video, and I'll keep you posted on my thoughts on the dollar.